So I spent well over $5,000 on trading education over the years during my trading journey. And because of the money that I spent and the thousands of hours that I've spent studying, I've been able to simplify what I've learned into two key main factors that you need to look for in the market. These are two key main factors that enabled me to become profitable and funded. And I'm going to break it down with you right here, right now. So what I've got here is GBPUSD, and this is the 4-hour time frame. Okay, remember what I said? There's two key factors that we look for, and then let's quickly discuss what they are. The first one is what? Liquidity to target. That's what we're looking for. Liquidity to target. That's number one. If there is no liquidity, then there is no trade. Why? Because we have to know where the market is going. We have to have a great idea where the market is going. Of course, nothing is certain, but when there's liquidity in the market is drawn to that point of interest. All right. And when we talk about liquidities, we're talking about structural points, structural highs, structural lows, multiple structural highs, multiple structural lows. Okay. And the second thing we're going to be discussing is liquidity to take, or what I like to call traps. Liquidity to trap. Because what this does is this gives us a basic system to understand where we believe price will reverse. So first we look for where liquidity is lying. So we think that where price might be drawn towards. But then we look for where is price going to reverse from to then go towards that target. So the liquidity to take, or the liquidity to trap, I'm going to change this to liquidity to trap. The liquidity to trap is our entry zone or our place of interest. The liquidity to target is where we want to get out of the trade. All right. That's literally all you need to develop your own simple trading system. And this is my simple trading system. Of course, there's more to it than that, but this is the crux of it. All right. So I'm going to break down this price action right here, GBPUSD, and we're going to discuss what we're looking at. So first things first, what do we see here? So what we have is this bearish channel, all right, or trendline liquidity. And what do we have also? This high up here. You can see price came down, price moved higher, mitigated something here, all right, and then price moved lower. Now what are we seeing? So what do we have first? We have our, let's make this smaller, liquidity. Why does it keep doing this? I have no idea why it keeps doing this, guys. We have our liquidity to target. Made that a bit bigger for us. So liquidity to target is up here. All right. So now we have our liquidity to target. As price is creating this liquidity, if we wanted to get into this zone though, where would we, this trade, where would we want to enter the trade? And simple thing is, you're looking at structural points to the left. Okay. And so the first things first, first place you'll be looking at is here. All right. And you can see there's no bullish response, but it respects the high and goes lower. Next place would be here. The structural point here. And then you've got the internal structural points in here that aren't as clean or clear. So for me, the cleanest place would be this one. All right. So this would be our what? Liquidity to trap. All right. So we've got liquidity to trap, and we've got our liquidity to target. And that is that. It's that simple. Liquidity to trap, wait for this to be trapped. Then you aim for the liquidity to target, which is the high of all of this liquidity that has been built up. right? Simple as that. Easy. Cool. Let's see what happens again here. As price moves higher, you can see here, what does price create? Price creates a beautiful channel here and here, all right? So you can say these are more like channel / relatively equal highs. But what price has done here is this high up here, price has moved away and come higher, and this has mitigated price here. So perfectly, we have liquidity sitting up here, all right? And we got our channel. So before we're even looking for a trade, we know that we've got liquidity up here, and we've got liquidity down here. So what does that mean? That means that this is what? It's liquidity to target. Great. So where is the liquidity to trap? It's quite obvious. Of course, we're doing this in hindsight, but it's quite obvious, isn't it? It's the bottom of this channel / trend line. Liquidity to trap. What does price do? Price comes down, respects it, comes back higher. So it doesn't respect it actually. It takes it out straight away actually. Here. Gives us a nice new high, break of structure, and comes lower one more time. And it comes into this point of interest right here, which is what I would call my strong low, to then move higher, okay? So similar thing again. What do we have? Liquidity to target, liquidity to trap. On the left-hand side, liquidity to target, liquidity to trap. Okay, now let's move on. So now price has moved higher, it's taking out this liquidity here. So both sides of liquidity have now been taken here. What is price now doing? Price has now created a new high, okay? So at this point, where is the liquidity? Where is the liquidity at this point? At this point, there isn't much other than, I would say, this here. Once a new high is created up here, this is now the only liquidity. Why? There are no structural points within here other than this one up here. But down the bottom of the range in here, there are no clean structural points for liquidity, meaning that this is the only logical place for price to come down and sweep that liquidity, okay? But let's look at what happens quickly. As price comes down, what is it doing? We're seeing liquidity being formed via these channel being made here, and even here, we've got a nice channel being made here as well as price comes lower. But what is interesting here? What's the most interesting part? Price comes down, so it takes out all of this liquidity down here. So even here, this is a great place for price to reverse. This is a more advanced trade. This is not what I'm getting into in today's video, but this would be a structural point, structural liquidity to trap. And we've got our equal lows created here. It's not equal, actually, this has been taken out. But we've got our relatively equal lows, and we've got this low down here, which are relatively equal lows to target, all right? Liquidity to take, structural point, liquidity to target. However, this is not what this video is about, okay? I'm looking at the more obvious positions, which we're going to discuss right now. So we've got the first two moves, and then now we're looking at price coming down. Price is building liquidity down, isn't it? Channel being created here, channel being created there. And what does price do? As it comes down and takes out this, which what I'd call my trap low, this initially would be my strong low, and we would respect the response from here. But what does price do? Very cleverly, it creates beautiful equal lows. Okay, this is not a coincidence. This is done on purpose. But what does it mean? We now have our, when price moves away from it, what does that mean? We now have our liquidity to target. Okay? So we've got liquidity to target here, and what else do we have though? We also have this channel up here, and we've got this channel down here as price moves away, all right? So this also becomes, for me, my liquidity to target. Or is it my liquidity to take. And here's the powerful thing. It's both. It is both. Price moves in cycles. Again, it's not something I can get into right here, right now, but price moves in cycles. So we've got our main liquidity target up here, okay? But this is our liquidity. Actually, at this moment in time, this is our liquidity to take, okay? So if we're looking at it, let's imagine that this price action here did not exist. If it's going to let me, that's why. Let's imagine that, that is so annoying, so let me blank it out. Let's imagine that this price action, why does it do this, guys? Very frustrating. Let's imagine that this price action to the right doesn't exist. Okay? We've got liquidity to the low side. We've got liquidity to the top side as well. Okay? Excuse me. What are we going for at this point? What are we going for at this point? A lot of people believe we've got equal lows here. So price is going to just bounce off the equal lows and then come straight back down. No. What does price want to do? Price wants to first trap or take liquidity on the opposing side first to then target their main liquidity target. So we've got our liquidity to trap up here. And then we've got our liquidity to target down here. Okay? So if you're in this position down here, once this liquidity here has been taken out, when this would be our trap low, that would mean that you know that your target would be, ideal target would be the top of this channel. Because there's liquidity to trap. But then you would expect what? Price to reverse from here and come back down to target these equal lows, as it does. All right. But let's look at this in a deeper level. What does price do when it starts to move higher? It takes out the high, but then it starts to do what? It creates multiple highs or multiple liquidity points up here. Okay. So of course we've got our main liquidity to trap, up here. But then we've created even more liquidity to trap here. And what does price do also? On the smaller time frame, we've got our liquidity to take down here, which is this trend line. And then we've got our liquidity to trap, to target, which would be this high. And also this high would be our liquidity to target on the smaller time frame. But on the 4-hour time frame, which is this time frame, this up here is our liquidity to trap. And the below the time frame, the target at the bottom here, these equal lows, the liquidity to target. This is why we say price action is fractal, because price is doing the same thing on different time frames. Okay, so what do we have here? We've got our, as we're moving higher, we've got our liquidity to target on the smaller time frame, and then we've got our what? Our liquidity to trap on that same time frame. So we've got liquidity now on both sides. One side's taken out here, taken out beautifully, as well as this internal structural point just before the imbalance. So we now have a position here that we could be involved in. And where would we target? Yes, the liquidity to target up here, and also the liquidity up here to trap on the higher time frame, but it's just our liquidity target for the buyers. All right. And what price is doing at that same time, of course, we've got our equal lows to target, but we've also got a nice channel, which are nice structural points for, so we've got two channels here, fractal channels. We've got the main big one, but then we've got one here, which would be the small one just before price took the high to the left. And then we've got one here as well. But either way, it's price creating structural liquidity to take on the way down. So if you're in this, you would need to get out up here. Okay, why would you not target here? You wouldn't target here because there's no liquidity up here. This is the inducement high. This is the high point where price has taken out all the liquidity and no one's entered a trade here. There's no one entering up here. Typically, they'll be entering as price moves away, as it moves low, as it creates structural point, because very rarely do traders trade without structural points. So there's no liquidity up here. Whereas here, beautiful liquidity. So if you wanted to, if you got the understanding, you could literally trade on a higher time frame, set your limit up here, stop loss above maybe the high, or even stop loss above this high here internally, and target in the equal lows. Because you understand what? You have your liquidity to trap on a 4-hour time frame, and you got your liquidity to target on the 4-hour time frame. That's it. Simple as that. And then if you look again, what does price do? This is actually where live price action is right now, this weekend. But you've got another channel being created. And what has price done? Price has come down, taken out our liquidity to target. All right, so that's that target met for these sells initially. But what are we now seeing here? We're now seeing this. So we now have our liquidity to target. All right, so that's the overall higher time frame target. Got our liquidity to target potentially if price wants to come up here. Okay, but if we were to get into that, how would we do it? Okay, well down here, what did we have? First things first, I have to mark out these channels, which is even more liquidity points to attack higher, which has already been taken out during this week. However, what does price do here? Price moves away, comes lower, takes out this internal, and then moves higher again. But what does price do as it does that? It creates a nice trend line, giving us what? Liquidity to trap. And what do we have here on the lower time frame? Liquidity to target. And why would this be a safe place? Because this is the inducement low, taking out this liquidity to the left. And on the high time frame, we're now looking like we are bullish. All right. So it's as simple as this, isn't it? You have your liquidity to target, you have liquidity to trap, and you find your entry after the liquidity has been trapped, and you look at and you trade towards the liquidity that you want to target. But what's the key here? The key here is that you need liquidity. You need liquidity on both sides. You need liquidity first to target, and you need liquidity to trap. Without either of them, it's very hard to work out where to enter a trade. To work out a trade setup, you need your liquidity to be trapped so you can enter, and you need your liquidity to target so you can exit. Those are the two key factors that you need when you're looking at a trading system. And if you want to watch more, you want to see my trading system in action, it's a bit of an old video. My trading system has changed a bit, but the core concepts of the system, you can watch it in this video right here. Enjoy.